Thanks, Charlie. Welcome to OnChain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, and I'm going to be taking you through the on-chain data behind cryptocurrency markets over the last couple of weeks. In particular, we're focusing on the 13th to the 26th of April. And in that time, the Bitcoin price has risen significantly, in particular on the 16th and the 23rd of April. So what was actually happening on the blockchain at that time? Well, we've seen some very large inflows of Bitcoin to exchanges on the days prior to that price increase. And that's actually unusual. When we see these large inflows of Bitcoin to exchanges, we expect that Bitcoin to be sold and therefore the price to fall. This time round, we saw the price increase. Now, why might that be? Well, we have heard that there were large amounts of fiat sitting on exchanges waiting to buy Bitcoin. So perhaps when they saw the price start to move and they saw this extra liquidity enter the market, that was seen as a signal to buy. And actually that waiting demand that was on the sidelines has actually helped buoy up prices. Also interesting to see in this chart, the effect of the weekend. Inflows to exchanges are much higher Monday to Friday, and they really drop on Saturday and Sunday. So we can see that actually a lot of people involved in crypto do it as their day job. What else can we see from the flows of Bitcoin to exchanges? Well, we can look at the flows of Bitcoin between different types of exchanges. Crypto to crypto exchanges, crypto to fiat exchanges, where you can sell your crypto for dollars or pounds or euros, and then the derivatives only exchanges. And last week, the interesting thing for me was that there was a net flow of $158 million from crypto to crypto exchanges to crypto to fiat exchanges. Now, how can we see that? Well, there was a flow of $452 million from crypto to crypto exchanges to crypto to fiat exchanges, and a flow of $294 million the other way, giving this net flow of $158 million. Also interesting is that there was a net flow to derivatives exchanges, so more money entered derivatives exchanges than left last week. We can also look at the flows of Bitcoin between different geographies. Now, we're able to do this by analyzing the time zone patterns and other open source intelligence such as web traffic of cryptocurrency businesses to understand the regions of the world where their customers are likely to be. Breaking the world up into three regions, Eastern Asia, North America, and rest of the world, we see that in the last week, most of the activity was actually within the regions. So people within Eastern Asia were largely sending to people also in Eastern Asia. There's $350 million flowing within that region in Bitcoin alone. Next up was North America, sending to North America, and then the rest of the world to the rest of the world. And that's actually kind of strange. Normally, we see larger flows between the regions. So the story of last week was perhaps about action in local markets. But Bitcoin was not the only story. Tether has also been interesting recently. Tether flows into exchanges are higher than their historical averages, currently at about $200 million a day. And there isn't so much Tether flowing out of exchanges. There's always some uncertainty in this because a lot of Tether is often put into a cold wallet, although it's still under the control of exchanges when it is. But even taking this uncertainty into account, we believe that there's an increase in balances of Tether on exchanges. So what is that Tether doing there? Well, it's not yet being traded. And that's really interesting. Suggests this Tether is sitting there as dry powder waiting to purchase cryptocurrency. But how can we tell that this Tether is waiting? Well, we can compare the ratio of Tether that is traded for every Tether that is received on chain. And over the 200-day average, it's been about 22 Tether being traded for every one that was received on chain. But in the last 14 days, on average, there's just been 10 Tether traded for every one that's received on chain. And so suggests that actually there's a lot more Tether sitting there waiting to be traded than is actually being used in the markets at the moment. And this perhaps is not surprising. There's been a lot of Tether issued recently. But what I also find surprising is that that issued Tether has not actually saturated demand for Tether. How can we get a handle on that? Well, we can look at the velocity of Tether on the blockchain. We're looking here at the amount of time that Tether was held before it was sent on again. And actually, there's been an increasing amount of Tether that's been held for less than 2 weeks before it's been sent on. And that suggests that people are really demanding Tether and its velocity is increasing. So in summary, in terms of what's been happening on chain this week and its relation to the markets, well, Bitcoin has seen both a big price increase, but also large inflows to exchanges. And that suggests that there's strong demand, because otherwise we might see the prices fall as those inflows came in. It does look like some profits have been taken in fiat. So some people decided that actually they think prices are where they're going to be for a while, or perhaps they just think they need to balance their portfolio and take some cash now. And while there's been a lot of Tether issued recently, it does seem that the demand remains. But for me, there's a big question. What is going to happen with all the Tether that is currently sitting on exchanges? And that for me is a key question to look at over the next week. So I hope to discuss that with you again when we return.